continue, and Sheela Foam is the management that we put the spotlight on. The company reported a 66% fall in its net profit. Margins also narrowed. To discuss more on the quarter gone by, we are now being joined by Rahul Gautam, who's the executive chairman of Sheela Foam, who's joining. Mr. Gautam, good morning. Thank you for joining in. After the year that you have had in FY26, FY25, what are the kind of targets that you are penciling in for FY26 on the revenue front and on the margin front as well?
Thank you. Thank you for inviting me, and it's a pleasure to be here. So, yes, it's true that the last year has been flat as far as the top line is concerned, and there has been a drop in the earnings part. But let me just share with you that last year was primarily setting the base right, and after the big acquisition that we have kind of gone through, most of the base work has been complete. The back end was, of course, completed long time back. The front end is settling down, and the targets that we have taken for this coming year, FY26, is at least a top line increase of 10 to 15%, and a bottom and an EBITDA levels of also 11-12%.
You're saying margins will increase from 3.9% exit rate to 11 to 12%.
3.9% is probably not an accurate number.
Okay.
We have, I mean, on a consolidated basis, we have finished off at 8.3. But if I look at standalone Sheela Foam, that has been also upwards of 8%.
Okay. So top line 10 to 15%, margins 11 to 12%.
10 to 11%. Yes.
10 to 12%, which compares with about 8.5% that you clocked in.
Right.
In the quarter.
That's right. That's right.
Right. What about market share? What is your current market share? Did you lose market share in the year gone by, considering that you had flat growth? And what is the outlook on exports going ahead?
So, ma'am, as far as the market share is concerned, we have actually gained market share. The volume growths have been far more. I mean, I can say that the volumes would have gone up by about 8-9%, 10%, while the value would have been flat. Actually, the raw material prices, which contribute a lot to, let's say, the industrial part of our business, where it is just the raw material prices plus the margin, the raw material prices have been low, and actually on one of the lowest in the last decade that I would say. So that's why the top line appears as far less, or far, and obviously even on a percentage basis, it's a struggle to sort of cover up the expenses. But I would say most of the time was spent on consolidating, setting the base right, and all that has been said. You mentioned about exports. Exports have never been the strength of our business. The products are highly voluminous, whether it's mattresses or polyurethane foam per se. And it's only in between that we just got a little bit of a ray of hope that's post-COVID, when US was exploring the China plus one factor. But post that, even the Chinese imports into the US, or subsequently, wherever they have been shifting bases, the Chinese exporters, whether they went to the Europe or even up to Mexico, etc., it's not been working. I mean, today, of course, we know what the struggle going on in the US is of trying to manufacture within US. So our exports are going to be very, very nominal, because it's only highly technical, proprietary foams which go by and large. Foam products, whether mattresses or furniture, is difficult to export.
Mr. Gautam, just before I get to Kurlon, since you mentioned about the difficulties that you faced in manufacturing in the US, if you could shed some light on that, and would it be fair to assume that this tariff drama that happened over the last month and a half, with them in US and China increasing tariffs on each other, and then the opportunity that came in for the Indian markets, would it be fair to assume that there was no such benefit that accrued for your company?
No such benefit that accrued. Absolutely. I mean, it's except that at that time when people, especially the American importers, were looking at a China plus one, then that's why India appeared as the normal thing to go by. But, by the time we also set up an export unit, but it's it's everything else, it's handling the freight, it's the freight cost, it's the availability of containers, etc. And then very rapidly it went to the import tariffs that US was levying. So on products like that, it had gone up to almost about 100% level, and now, of course, it is still under settlement. But whether something big will come out of it, probably not.
What's the expansion footprint for Sheela Foams? I'm not talking just about FY26. Say 3 years down the line, how many outlets would you like to have? Exclusive outlets or in MBO format, and what's the amount that you're planning to commit to expansion?
So at the moment, as I said, I keep the last year as a kind of a stabilizing process with the acquisition of Kurlon. Today we have active footprint of about 4,500 outlets. This is increasing by about 500 per month, per quarter as of now. And I would say that if the current quarter that's gone by, whatever has passed is any indication, we are well on track of that. So if you are looking at a 3-year period, what I see is about a 6,500 outlets at the end of that 3-year period. And they would be mostly exclusive. Of course, there are areas where MBOs have to be taken care of and have their connections and relationships in that area. And we have our program to take care of them. But by and large, the proven, let's say, format has been that of an exclusive outlet.
One final question, Mr. Gautam, very quickly, if you could tell us how is the integration of Kurlon panning out for you? You had mentioned earlier that you would get to 1,000 crore annual run rate by the fourth quarter with 12 to 13% margins. How has that shaped up in the fourth quarter, and how much of the additional cost synergies are you still left to realize?
So let me start with the last part of your question, which is the cost synergies. So we had expected or we had targeted for cost synergies of about 220 to 230 crores. We have realized about 140 out of them. Rest delayed a little bit, but it should be should be realized in this quarter itself. The integration part of it, which we all know that acquisition is a far simpler thing to do and integration takes time. The back-end integration is complete from a footprint where just the total of 18 units have been now reduced to 12 units, which are the optimum number for now and actually also for the next 3 years as far as India is concerned. So that consolidation has taken place. The front end is taking place where there were completely two different ways of doing businesses, and we have zeroed down to exactly how it needs to be done, activating the distributors, looking at your own warehouses or your distribution centers, etc. And that we are absolutely well on track. Actual realization will begin to happen post this quarter.
All right, Mr. Gautam, thank you so much for sparing time and joining us today on the show. Wish you good luck for the rest of the year as well. The management there of Sheela Foams on tariffs and the acquisition of Kurlon as well.
By the way, just see how